Welcome to Looking at the Markets. There's some charts I want to show you about stocks and also about gold and silver toward the end, because I think a breakout might happen. We might actually be in a breakout right now for precious metals. But first of all, the S&P 500, you'll notice that the last two times that the S&P 500, and this is going back to the 1990s, the last two times the S&P 500 MACD line crossed below the MACD signal line, and that's a bearish MACD cross. The last two times that happened, look what happened to stocks afterward in the early 2000s and then in 2008. And so it's happening again, a bearish MACD cross, MACD line going below the MACD signal line very recently. So this could be a trouble signal. It's not a large sample size, just two instances in the past on this chart. This time could be different, but yeah, it's just something to think about. Also, there's not a lot of breadth in the S&P 500. We have a few stocks, tech stocks mainly, holding up the index. And that's not necessarily a good sign. Small number of stocks outperforming the S&P 500. And so when the percentage of S&P 500 members outperforming the index, when it gets down to a certain level, that could coincide with or precede a recession, like in the early 1980s, early 1970s, the year 2000, that kind of thing. So here we are again. There are no guarantees. I cannot say definitively a recession is coming or that we're in one right now, but these are just signs. I think I've talked about this one before, but it's worth repeating. When the unemployment rate goes way down and then bottoms out and starts to curl back up, historically that has preceded or coincided with recessions, either during a recession or right before one. And the U.S. unemployment rate recently bottomed out, hit a 53-year low of 3.4% in January, and then starting to climb back up to 3.6% in February. So if unemployment has in fact bottomed out, that's probably, and is starting to come back up, that's typically not a good sign for the economy and the stock market. Here's another one. This one is a somewhat better sample size, 6 instances on this chart. Not a huge amount of sample size, but it's something. So in these instances, after the Federal Reserve pivoted, meaning Federal Reserve switched from hiking interest rates to cutting interest rates. You might think that's the time to buy stocks, but historically, no. Historically, the S&P 500 went down after the Fed pivoted from interest rate hikes to interest rate cuts. Isn't that interesting? You wouldn't expect that necessarily, but the data says what it says. So in 1969, 73, 81, 2000, 2007, and 2019, all those times after the Fed pivoted, look what happened to stocks. Interesting. Some big market corrections and crashes here. So that's something to think about. The Fed hasn't pivoted yet, but it's not going to hike interest rates forever. There, yes, likely will be a pivot at some point. Here's another one. Not a big sample size, only 3 on this chart. Maybe a 4th one over here as well. They didn't count this one, but yeah, this might count as well, but at least 3 on this chart. When lending conditions tightened, when credit conditions tightened, meaning it became harder to get a loan for a business or individuals. So you have credit conditions getting very easy. A business can get a loan very easily, and then credit conditions tighten. Banks aren't loaning so easily anymore. That happened, well, we all know what happened after the year 2000 and then 2008 and the year 2020. And here we are again. Credit conditions are tightening quite a bit. We're up to that level again. And there are no guarantees as to what's going to happen in the future. These are just past instances. I don't want you to draw any conclusions, just something to think about. Meanwhile, gold is looking great. Look at that breakout. Okay, yes, you have a downward trending channel and breaking above it. And a lot of people are watching that $2,000 level for gold could be significant if it breaks above it with heavy trading volume. And silver's looking quite good too. Looking for a breakout above 28 here for that cup and handle pattern, the cup, handle, and this is a long chart going back to the 1970s. So this has been going on for a while. Hey, no guarantees. It might get rejected at 28, but imagine if it breaks out way above it. That would be something, wouldn't it? Price above the 7-year moving average in right hemisphere. Look at that. Okay, so something to think about. I like precious metals. Maybe you do too. And maybe you don't want to go all in on the S&P 500 right now, but it's up to you. You do what you want to do. All right, this is just for informational and entertainment purposes only. Make your own decisions. But yeah, I'm being a really careful stock picker, and I'm still a fan of gold and silver for sure, and other commodities too, but definitely gold and silver. Yep. So take this for what with a grain of salt. Streaks are broken, okay, and it could be different this time, but I think caution could be advisable right now for the S&P 500 generally. All right, so I want to thank you for watching and listening. I will talk to you again soon.